Markets edge higher as investors await U.S. jobs report. Major indexes in Europe posted modest gains today as traders look ahead to the U.S. non-farm payrolls report, due out later today. The data will provide a critical glimpse into the health of the labor market and potentially give further clues on the trajectory of Federal Reserve policy. The Stoxx 600 index added about 0.2%, on track for its strongest weekly performance since March. Gains were led by automakers, with BMW shares rising after the company reported increased sales of fully electric vehicles, which boosted margins. However, it wasn't all positive news out of Europe. Shipping giant Maersk warned it will cut at least 10,000 jobs in an effort to protect profitability amid slowing global trade. This news sent its shares down over 7% today. U.S. futures indexes edged lower in pre-market trading, with Apple stock under pressure after reporting that revenue from Greater China came in below expectations. Sentiment was more upbeat across Asia, where the MSCI Asia Pacific Index surged over 1% and notched its best week in 2 months. All eyes now turn to the October jobs report out of the U.S. later today. Economists estimate the pace of hiring likely slowed substantially from September's robust gain of 263,000 jobs. A cooler jobs number could reinforce the narrative that the Fed's aggressive rate hikes are beginning to achieve their goal of easing tight labor market conditions. A decrease in job numbers may signal loosening in the labor market, which tends to weaken faster than it tightens, noted economists at Rand Merchant Bank. This could challenge the Fed's view of keeping rates high for longer. In other economic data, U.S. productivity rose more than expected last quarter, which could help offset some of the inflationary pressures from recent wage growth. The U.S. dollar dipped for a third straight session and is poised for its biggest weekly drop since mid-July. Treasury yields ticked higher, with the benchmark 10-year yield holding around 4.67%. Looking ahead, analysts at UBS predict the 10-year yield could fall to 3.5% by next June, assuming the Fed pivots from rate hikes to rate cuts as it shifts focus toward supporting growth or inflation fighting. Not all analysts see yields continuing to decline though. Franklin Templeton said yields could still potentially peak around 5.25%, while hedge fund K2 Asset Management believes they will rise back to 5% after recently dropping under 4.7%. In the commodities corner, oil prices were on pace for a second straight weekly decline as geopolitical tensions between Israel and Hamas have so far remained contained. Gold prices were headed lower for the first week in 4. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. U.S. jobs report takes center stage. The U.S. dollar remained under pressure against major rivals on Friday ahead of the critical October jobs report data. The report will provide key insights into the health of the labor market and guide expectations for future Federal Reserve policy. The U.S. dollar index fell 0.5% on Thursday, now holding around the 106th level in early Friday trading. The declines came despite mixed U.S. economic data, including a drop in labor costs but also a rise in jobless claims. All eyes now turn to today's jobs report, which includes the non-farm payrolls figures and wage inflation metrics. Economists forecast hiring likely slowed considerably in October after September's upside surprise. Slower job gains could reinforce views that the Fed's aggressive rate hikes are starting to cool demand for workers. Beyond jobs data, the U.S. calendar also brings ISM service sector activity data for October. This follows yesterday's better-than-expected factory orders report for September. U.S. Treasury yields fell sharply on Thursday, with a 10-year rate dropping below 4.7% to put additional pressure on the dollar. Wall Street indexes rallied on the back of easing rate hike expectations. Turning to other currency markets, the Australian dollar treaded water around 0.6450 after Aussie retail sales grew a modest 0.2% in the third quarter. Vacation service sector PMI in China edged up but remains barely in expansion territory. The euro gave back some gains versus the dollar after advancing strongly Thursday. The shared currency trades modestly higher above 1.0600. Sterling saw volatile swings after the Bank of England left rates unchanged at 5.25% Thursday following its policy meeting. The pound rallied initially on a dovish tone but then retreated. Cable changed hands near 1.2200 on Friday. Finally, the yen extended its rally against the broadly weaker dollar, helped by falling U.S. yields. U.S. dollar to Japanese yen remains under pressure but holds the 150 level for now. In commodities, gold prices were little changed around $1,985, unable to capitalize on the softer dollar. Crude oil prices were on track for a second straight weekly decline on easing geopolitical tensions. Overall, currency markets seem poised for increased volatility surrounding the U.S. jobs report today. A weak number could accelerate the dollar's slide while a strong read could prompt a reversal. Traders are likely to closely analyze the figures for any implications on the Fed's tightening path. Bitcoin edged down Friday on news that Sam Bankman-Fried was convicted on fraud charges related to the implosion of his crypto exchange FTX. The developments added further uncertainty to the already battered digital asset markets. Key events this week. Eurozone unemployment, Friday. U.S. unemployment, non-farm payrolls, Friday. Canada employment report, Friday. Some of the main moves in markets. Stocks. The Stoxx Europe 600 rose 0.2% as at 8:15 a.m. London time. S&P 500 futures fell 0.1%. Nasdaq 100 futures fell 0.3%. Futures on the Dow Jones Industrial Average were little changed. The MSCI Asia Pacific Index rose 1.1%. The MSCI Emerging Markets Index rose 1.3%. Currencies. The Bloomberg Dollar Spot Index fell 0.1%. The euro was little changed at $1.0632. The Japanese yen was little changed at 150.35 per dollar. The offshore yuan was little changed at 7.3218 per dollar. The British pound was little changed at $1.2197. Cryptocurrencies. Bitcoin fell 0.9% to $34,589.64. Ether was little changed at $1,803.59. Bonds. The yield on 10-year treasuries was little changed at 4.67%. Germany's 10-year yield was little changed at 2.72%. Britain's 10-year yield declined 1 basis point to 4.37%. Commodities. Brent crude rose 0.4% to $87.21 a barrel. Spot gold rose 0.1% to $1,988.07 an ounce. In conclusion, we'd like to thank you for watching Market Briefing, market analysis and financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.